Okay, guys, so looking at the UK 100 index, which is the FTSE 100, we have seen a strong breakout of this downward facing trend channel that we was in previously. And of course, we know why, because the vaccine news, which is coming out that there could be a vaccine in early 2021, as well as a Brexit deal being agreed between the UK and the EU, because they're expected to extend their talks past the deadline of the end of this week if they can't agree on a deal. And that's basically telling you that either side is not willing to leave negotiations without finding a deal, because in the pandemic and where we are at the moment, they both can't afford to not implement a trade deal between the UK and the EU. So why is that very important for the UK stock market? Now, remember, the stock market and the currency are very interlinked. So if you look at the Great British Pound against the USD, we've seen the pound strengthen against the US dollar in the last few sessions, and that's quite bullish and positive, obviously, because of the outlook for the UK economy is turning more positive, and that's why the index is pushing to the upside. And more importantly, just remember that the UK exports a vast majority of their goods and services to Europe. 56% of all UK exports goes to Europe. So if the UK and the EU can agree on a trade deal where the UK is not subject to European tariffs and taxes when they sell their goods to Europe, then European consumers are going to continue to buy British goods. And that means investors are going to be comfortable to buy the stocks within the UK FTSE 100, because they know that the companies within this index are going to have a tariff-free access to sell their goods in Europe, and they're more comfortable to invest in these companies if they can still sell to their biggest export market without being subject to taxes. Okay, so that means that they're confident about these companies' earnings being positive and strong over the next year or so. Now, more importantly, if that is the case, then remember, UK assets have been very undervalued because investors have been reluctant to go into the UK stock market and buy these stocks, because there's been so much uncertainty around the UK's trade relationship with Europe. So they've been holding out from investing in the UK until there's clarity over the UK's trading relationship with the EU, because they want to make sure that they can get tariff and tax-free access before they buy UK assets. And remember, with the British pound strengthening against the US dollar, and it's expected to go up to around 135 against the dollar, or even 140 against the dollar, if they buy the pound now and they buy UK assets now before the pound goes up in value against the US dollar, they're going to be able to buy more British assets for a cheaper price before the pound strengthens against the US dollar. So as I said in the previous video that I posted today, remember, the US dollar is the world's reserve currency. So if you buy the British pound with your US dollars now at the exchange rate of 131, you're going to get more pounds in exchange for dollars now and you can go in the stock market and buy UK assets before the pound goes up to, say, 140, which means you can buy less pounds with your dollars, and then UK assets become more expensive for you to buy. So investors would rather go into the stock market now, buy UK assets before the pound strengthens, on the expectations of a trade deal with the European Union, because the pound will probably go up to around 140 in the exchange rate, and they'll go into the stock market now and buy UK assets and position themselves for the outlook of a vaccine coming into play in 2021, meaning the markets will reopen in terms of trade and people spending money. That would be bullish and positive for the biggest companies within the UK index. And on top of that, they want to buy these assets now before the pound strengthens and these assets become more expensive. So that's what's driven the UK 100 higher. And again, if you get more positive headlines on Brexit, if you get more positive headlines on the vaccine, then markets are going to be looking into 2021 about growth expectations, and they're going to start to buy the stock market now, because remember, the stock market is used as a barometer for further growth expectations over the next year or so. They position themselves now in the index because they're betting on growth to return, and growth means higher earnings for these companies. And of course, that means a higher share price, and then the index moves to the upside. So on the Brexit deal and the vaccine front, we could see these index continuously rise. So it could be a good buy to get in now and position yourself for a rising index in the market. So that's looking at the UK 100, which is looking like a good buy at the moment on these expectations. Thank you.